Recent developments will significantly impact the world's financial markets, and since cryptocurrencies are the most volatile, they will inevitably be affected the most. So let's start by discussing what this update is and what we may anticipate happening here soon. What is generating all this volatility? And why will the cryptocurrency market almost certainly experience some significant changes soon? Those are excellent inquiries. First, let's talk about the recent news we received on Friday, notably the one about crude oil and the just released U.S. job statistics. We can see that the job situation is not good now, which is certainly not a good indicator for any economy. Typically, you want to see employment and historically low unemployment rates. At the same time, you are aware of the prices of products, of course. Keep in mind that while this is generally good for customers, the reality is almost exactly the reverse. In addition to the higher than normal unemployment rate, consumer prices are also rising steadily. You don't have to look very far to notice that now. Do your grocery shopping or check the price of oil. As many of these businesses are practically scrambling right now to make ends meet, you'll quickly notice that all consumers are currently getting the short end of the stick. Naturally, no economy would benefit from such. We are under a lot of stress right now, so it only makes sense that if the inflation report, due out this Thursday, shows that inflation is not at all declining, we will be even more stressed. That's not going to be good because, as interest rates continue to rise along with quantitative tightening, effectively increasing all of the mortgage and credit card debt, people have less and less money. And consumers also have to pay extra for the regular items they purchase at the end of the day. Right? So it makes sense that we would want inflation to decrease. It's at a point where it can't continue. It appears that this will not be the case. Naturally, this will have a considerable knock-on effect. Technology, equities, and cryptocurrencies are typically the first to be severely impacted in situations like this when inflation is not addressed how we want it to be. There are plenty of options around. You can obtain a solid foundational grasp of, it's not the best by looking at how Apple and Google have been performing recently. For these riskier stocks, there are numerous well-known cryptocurrencies, including Bitcoin, Ethereum, and many others, and businesses like Tesla and Google, observing significant price drops, which will inevitably have an impact on the entire industries that they do belong to. Naturally, we'll see these companies' earnings per quarter decline as people have less money to spend on luxuries, which in many cases is technology, in contrast to what they would typically experience during a bull cycle when all of these publicly traded companies are performing exceptionally well. Therefore, if this is the case, we may see anything on Thursday when we receive this information regarding inflation. I indicated that several more volatile items had a significant price decline. And you should be ready for this, since all the signs are pointing to the fact that the markets are already bracing for impact. And it will get a little worse once the official report is released. Naturally, there is always a bright spot in a cloud. It appears that the market is about to reach its lows. Despite the possibility of a few more crashes due to the release of inflation statistics and the further rise in interest rates due to quantitative tightening, now is still one of the most acceptable periods to participate in the markets. Since practically anything can occur in these markets, there is little value in attempting to time them. But based on past market tendencies, we know that now is the best moment to enter and make a lot of money in the long run. However, it will only be successful if you want to invest in this long term. Suppose you don't intend to keep it for the following 3 to 5 years. Whether you invest in the stock market, real estate, or cryptocurrencies, you'll typically make very little money overall. The most volatile assets may drop the most during tumultuous times like these. Still, they also rise the most during bull cycles. So if you do have a long-term outlook and you buy some of the most volatile assets, you'll see a lot of returns when the markets do recover, which historically they always do. And we all witnessed how businesses like Apple and Tesla behaved throughout the previous bull cycle that we experienced. Just because the market is currently in a bear market, it does not imply that a bull cycle will never occur again. In response to your inquiry, I would say that what I'm doing now is indeed. Before I decide what I will buy, I'm waiting for the CPA data to be released on Thursday. However, I am purchasing a massive amount of cryptocurrency. I'm investing heavily in technology equities, but I'm also considering other sectors. There is a lot of money available right now, and if you have the extra disposable income, aren't placing yourself in a bind, and are willing to hold for the next 3 years, some of these top cryptocurrencies and technology stocks will provide you with some genuinely spectacular returns, in my opinion. I firmly believe so, and while only time will tell how things turn out, you can build your view on this particular issue by examining prior market movements. Here is what I will say now. Even though there is a silver lining in the clouds, one of the biggest cryptocurrency likely crashes we have seen to date will occur given all the data we have access to, including the fact that consumer prices have been steadily rising for years and are still rising today. And there will be a great deal of pain as a result, and I'd like to issue this caution to everyone. It might not occur the next few days, but I believe it will likely happen in the next few months. And this is something we ought to all be ready for and simply eager to understand. It's something that will undoubtedly exist. With the way the markets are now operating, it is simply unavoidable. Just disregard the other market-influencing factors, such as the possibility of a third world war, the conflict between Russia and Ukraine, and the mounting pressure from China. You should know that when you invest, you must consider these factors. And even if I don't give financial advice, I only want to spread the word about education. Probably a challenging path is ahead of us. The bottom is indeed extremely close, as some of the most well-known investors who correctly predicted some of the biggest crashes in history are now beginning to suggest. Bill Berry and numerous others have predicted previous historical crashes, putting it out there that they believe the bottom is almost in but not quite there. Take a look at U.S. Treasury yields, and you'll find that things are looking reasonably lovely if you want to go ahead and buy something at the moment, because everything is essentially on sale. That's all for today. Thanks for watching the video.